Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Friday, the 15th of April. Right, the equity markets, another pasting, set up a risk-off situation. You can see very clearly here the dollar block going down, or the US dollar going up, and so pretty clearly defined. Now, the good thing about this is there's some more info on top here. Now, I'll just take you across to the sort of news page here. Oh yeah, Nikkei stocks up, share down. That's obviously going to happen as we see the US equities getting belted. The key part here was the ECB, right? So ECB stands pat on policy. They're going to start pulling some cash out of the market as opposed to raising interest rates. I think it's a smart move. Doesn't really matter what I think. It's more about what the market does with that. And so that's a bit of a negative, right? That means no interest rate hikes for the immediate short-term future on the euro, and that pushes the euro down. Now, if I just come over here to the currencies, it's actually real. This is a really good thing, right? Not just because they're doing something sensible, but the key aspect of this is, okay, you see the sort of flush out in the market. I mean, the price action here was quite loose. Liquidity wasn't exactly there. So you saw a lot of these instruments spike up and then come down. It's pretty refreshing to see all this activity as euro goes down, dollar Swiss goes up. It's good to see that moving. It's the first time in a while, right? And I've been waiting for it, where euro, sterling, I know it's just flushed out to the top side, but it is coming back down. Aussie and Kiwi, they are all starting to work the same. Dollar index, dollar Swiss, dollar yen, and with that sort of clean out, dollar CAD's coming back. So we're starting to see the US dollar behave across the board uniformly, right? Whether it was the uncertainty around the euro, which was discombobulating the European trade situation. I understand the geopolitical situation with Russia, Ukraine really blew out the European connection with the other currencies. That seems to be dissipating, especially after the ECB. Now, the two big things this week, US CPI, ECB. ECB is standing pat. We've got high US inflation. Euro's got to come down. Right. But is it right now? Is it the place to be selling euro? Well, not really. And I've drawn a horizontal line here just to highlight where those lows were. It's sort of like a big pivot line. You can see going back to, was that March, the low there, you got a double low there, a little clean out in stops, and it's right there again. I mean, I'll be looking to get into the trade whereabouts. Well, down here is a bit higher risk, but if it goes, it goes. You know, it's one of those things. You got to make your own sort of decisions there, where you get in, where you get out, and thinking that would have been an easy trade up here is not the case. I've only redrawn that trend line to there today. So it wouldn't have been there. It would have looked a bit like wacko if I just actually come back to where it was, right? So you see a nice clean out, and this happens on these big events, right? Clean out of positions ahead of the announcement, right? A bit of profit taking because the market was short euro, profit taking, the announcement, bloodbath, reaction. That's correcting the overreaction on the release. And now the market will start to sort of think about it. US, what are they doing? And there's talk about the US actually raising rates aggressively to try and get ahead of inflation without putting it into recession. Mate, that's going to be a tricky task. And I think we're going to have more opportunities on the US as we go forward. But euro has the move and the announcements from the ECB, as far as I'm concerned, has settled the market. And we should start to see these currencies sort of correlating together. It's easy to work with the currencies when they are all behaving in the same way against the dollar, right? The equity markets, well, not a terrible lot. As you saw here, just on, North American markets, which drive the rest of them. Bit of a blood basket there. Be keeping an eye on the US equity futures. Obviously, it's Good Friday, so what can you be doing? Not a lot, but that's what sets the tone. Now, Japan will be open today, obviously, something to think about. And we've got the whole Easter weekend. I'd pretty much encourage everyone to take Easter off. Now, for those crypto traders, you've still got plenty of opportunities. The cryptos outside Bitcoin Cash are trading technically very well. Still, if anything, lower. Nice little correction there in Litecoin, but it's still following the big guys as well. So anyway, that's something to look forward to. I wouldn't be sort of getting too involved over the Easter break. Take the time to get your charts in line, work out where all the action is, and then we can work out how to play it from there. But on the face of it right now, good news from the ECB, gives us clear trading opportunities, and you can see the market's all connecting. And there's not much else to do. All right. I did actually have a look here actually on this page. The yields here, the bond yields have been sort of going up. As the price comes down, the yields go up. That's going to sort of start to come in and be a major impacting influence, I'd say, over the coming week or weeks. Something to sort of look at as we go through that. And just keep an eye on your analysis. Your whole routine is very important to guiding you into trades and guiding you away from trades that you think might look good, but underlying suck. All right. All right, guys, that's it for me. Have a good Easter. All the best. And if you've got any feedback, jump on the Virtual Trading Desk site and let me know what you think. All right, guys, have a good one. Cheerio.